You are listening to Uranium Spotlight on Tuesday, August 20th, 2024. Brought to you by Pure Point Uranium Group, your exploration partner in Canada's Athabasca Basin. Amidst surging uranium demand, Pure Point's continuous 2024 exploration across their vast portfolio, backed by industry giants, underscores their focus on the next major discovery. And now your host, Chris Frostad.
This week on Uranium Spotlight, while Russia divides the uranium market further, China expands its influence over it, and one Nigerian uranium miner comes out ahead. Last week's uranium spot market saw moderate activity, with the spot price slipping to the low $80. Early in the week, the price remained stable at $81.50 a pound, with minimal transactions reported. Midweek, prices dipped slightly, leading to several deals, pushing the price down to $81 a pound by Thursday. Despite narrower bid-offer spreads, the week ended quietly with only 6 transactions completed, most for prompt delivery. The term uranium market was relatively subdued, with no new formal utility demand or contracts awarded. A few utilities are actively evaluating offers, including a non-U.S. utility seeking up to 6.7 million pounds U3O8 equivalent for 2028 to 2036 delivery, and others looking at smaller quantities for 2024 to 2025. U.S. utilities are also in the market evaluating term options for delivery starting as late as 2029. Activity is expected to pick up as we approach the fall industry meeting season. This week has been momentous for Rosatom, Russia's state-owned nuclear energy corporation. Rosatom is not only advancing its plans to build several new reactors in countries as diverse as China, Turkey, and potentially Burkina Faso, but it also signed multi-million-dollar deals to supply the fuel for reactors under construction in India. While these developments are positive for the global clean energy transition and for electrification in countries like Burkina Faso, which urgently needs more electricity generation, they also carry significant implications for nations outside Russia's sphere that rely on stable uranium supplies. Globally, many countries are turning to nuclear power to meet the rising electricity demand, driven by the rapid growth of artificial intelligence and the need to reduce CO2 emissions. However, there's a critical divide when it comes to uranium supply. Kazakhstan, the world's largest uranium producer, and Russia, another major producer, are channeling most of their uranium to Russia and Chinese interests. Russia, in particular, processes much of this uranium into nuclear fuel, which it then sells to its partners globally, countries like Turkey, India, and potentially Burkina Faso. Other significant uranium suppliers, such as Uzbekistan and Niger, also fall within Russia's sphere of influence. When Russia builds a reactor, as it plans to do in Burkina Faso, it often secures long-term nuclear fuel contracts. This strategy not only forges new alliances and secures political influence, but also ensures a steady revenue stream for the future. With Russia currently constructing 20 reactors worldwide, and the demand for uranium is substantial. This situation is leading to an increasingly bifurcated uranium market. Countries like China are sourcing uranium and nuclear fuel from Russia, Kazakhstan, and Niger, while Western countries are turning to suppliers like Canada and Australia. However, uranium production in Australia is fraught with challenges. Mining remains illegal in 6 out of the 8 states, and labor costs are significantly higher. India and Turkey occupy a middle ground, with Turkey exclusively purchasing reactors from Rosatom, while India maintains supply agreements with both Eastern and Western sources. Looking ahead, the global uranium market may split into 2 distinct pricing structures, one for Russia, China, and their allies, and another for the West. This potential divergence could have profound implications for uranium investors and commodity markets, as it could create different dynamics and risks depending on which side of the geopolitical divide a country falls. China, much like Russia, is aggressively expanding its presence in the global nuclear reactor market, particularly in foreign countries. A prime example is Pakistan, where China has not only built reactors in the past, but also secured deals to construct more in the future. Beyond reactor construction, China has developed a robust nuclear fuel industry, turning uranium concentrate into the fuel needed to power these reactors. With the 3rd largest number of reactors in the world and the most active construction program globally, China's demand for uranium is set to surge dramatically. Currently, with 55 operational reactors, nuclear power accounts for about 2% of China's energy generation. However, their goal is to increase this to 5%, a massive leap that will require a significant increase in uranium supply. China is well aware of this impending demand and has already secured substantial uranium supplies from sources such as Kazakhstan, Namibia, Niger, and its own western regions. Yet even these resources might not be enough to meet their ambitious nuclear expansion plans. Meanwhile, Kazakhstan's new Oba metallurgical plant has recently become operational, which should be a positive development for global utilities. This facility, operated by Kazatomprom, Kazakhstan's state-owned atomic energy and uranium corporation, promises a more streamlined nuclear fuel cycle, potentially lowering prices. However, there's a catch. So far, all fuel deliveries from the plant have gone exclusively to China. If this trend continues and China maintains its rapid pace of reactor construction, they could be the primary beneficiaries of this new facility, unless, of course, Russia decides to join the fray. Uzbekistan also plays a growing role in this dynamic. The country has reported an 11% increase in uranium output from last year, which might be good news for Western utilities. Not all of Uzbekistan's uranium has been snapped up by China and Russia yet, but China's National Nuclear Corporation and its subsidiary, the China National Uranium Corporation, are actively pursuing joint ventures with Uzbekistan's state-owned uranium miner. This indicates a continued effort by China and Russia to secure uranium from countries within their sphere of influence or those that remain neutral in global politics. With the spike in uranium demand from China and Russia, along with neutral nations like India and Turkey expanding their nuclear capabilities, the West exploring new technologies such as small modular reactors to power AI data centers, the global supply of uranium is increasingly becoming a tale of two halves. Canada and Australia remain key uranium producers, but challenges persist. Australia, estimated to hold the world's largest uranium reserves, faces internal opposition. Despite public support for nuclear energy, the current Labour government and most states resist any development of these resources. Canada, therefore, must be the last hope for Western buyers seeking a stable uranium supply. The question remains, how quickly can Canada ramp up production and at what cost and under what restrictions? Amid the challenges faced by uranium miners in Niger following the July 2023 military coup, Global Atomic has emerged with strong government support for its Dasa uranium project. While other companies like Orano and GoviX have seen their licenses revoked, Global Atomic received a letter from Niger's government on August 15, 2024, reaffirming full backing for the Dasa project. The letter, signed by President Tiani and his cabinet, emphasized the project's importance to Niger's socioeconomic development and assured continued facilitation of the project under current regulations. Global Atomic CEO Stephen Roman highlighted this government support as crucial to the company's progress, with the Dasa project still on track to begin production by the end of 2025. This support contrasts sharply with the setbacks faced by other uranium companies in the region, positioning Global Atomic as a resilient player despite the political turmoil. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.